we were talking about earlier, there's no right or wrong. So in these three screenshots, we're going to look at the difference between a smally drawn zone, not even a word, but a zone drawn small, a medium zone, and a large demand zone. And each variation impacts the risk reward ratio. That is what's important to remember. And just like we were talking about earlier, there's no right or wrong. If you have a tight zone, the risk reward is going to be better. So I kind of break it down here where a small zone provides the best risk reward ratio, but has a higher chance of getting stopped out before price reacts because there's not a lot of wiggle room, right? But then the pros and cons of things come into effect here where, okay, price is going to pull back though, and it could easily stop you out because there's not a lot of wiggle room. So there's no right or wrong when doing this. There's just differences because the zone is so small. The medium zone, which is always what I prefer, offers a balanced approach. It not only increases the likelihood of execution, but it also maintains a pretty good risk reward as well. But it also ensured that I got filled as price pushed in, because a lot of times price will just wick your zone and rally without you. And this is a still good risk reward. Now, the large zone, it has the highest probability of getting filled, right? Because price doesn't have to come down that far. It will tag you in the trade. But it also comes at the cost of a lower risk reward. I'm just saying it is different. I'm just trying to point out to you guys the difference here, the way you draw your zones and how big. And again, there's no right or wrong. It's only different, right? Maybe you're only looking for, one-to-one trades and you're looking for a higher win rate. Then maybe this big zone's right for you. And choosing the size depends on your risk tolerance and the trading objectives as well. So hopefully this was a good visualization of the size of the zones and why it matters and how it does affect it.